Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're taking a closer look at Equifax Inc.'s fourth quarter 2024 earnings call. Equifax reported earnings that met expectations with an earnings per share of $2.12, exactly what analysts had anticipated. The company's revenue for the quarter was $1.419 billion, which represents a 7% increase from the previous year. However, when adjusted for constant currency, the revenue growth was 9%, slightly below the company's expectations due to weaker U.S. hiring and mortgage markets. Equifax's Chief Executive Officer, Mark Begor, highlighted several achievements for 2024, including a revenue increase of almost 8% and an adjusted earnings per share of $7.29, up over 8.5% from the previous year. The company also reported a significant reduction in debt leverage and a free cash flow increase of 58% to $813 million. Despite these successes, the company faced challenges due to market headwinds in the United States hiring and mortgage sectors. One of the key strategic priorities for Equifax has been its cloud data and technology transformation. In 2024, the company completed consumer cloud customer migrations in the United States, Canada, Spain, Chile, and several other Latin American countries. This transformation is expected to provide a competitive advantage by allowing the company to focus on growth, innovation, and new products, including artificial intelligence. Equifax's efforts in leveraging its new cloud infrastructure have already resulted in about $300 million in spending reductions, with expectations to increase savings to about $360 million in 2025. The company is now focusing on using its Equifax cloud to drive growth through new products and services, positioning itself to enhance shareholder value through dividend growth and a multi-year share repurchase program. In the fourth quarter, Equifax's U.S. Information Solutions (USIS) revenue grew over 10%, driven by strong mortgage performance. However, the company noted that U.S. mortgage revenue declined significantly towards the end of the quarter as mortgage rates climbed above 7%. This trend is expected to continue into 2025, with the company forecasting a 12% decline in mortgage revenue credit inquiries. Despite these challenges, Equifax's Workforce Solutions division showed resilience with a 7% revenue increase in the fourth quarter. The division benefited from new product growth and strategic partnerships, including a significant partnership with Workday. Equifax expects this partnership to fuel revenue growth in verification services in the coming year. As we look ahead, Equifax's 2025 outlook reflects ongoing challenges in the U.S. mortgage and hiring markets. However, the company remains optimistic about its strategic priorities and its ability to leverage its cloud transformation to drive new product innovation and growth. Equifax plans to continue focusing on its core strengths and expanding its market share through differentiated data and advanced analytics. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.